Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. Oil prices are rising today, up more than 8% right now as the deal between the U.S. and Iran appears further away. Iranian state media says the country will move to fully block the Strait of Hormuz. Negotiators will stop exchanging messages with the U.S. in retaliation for what it says are ongoing ceasefire violations. Iran is focused on Israel's military operations in Lebanon against Hezbollah. Shares of Cogeco are under pressure today, down about 2.7% right now. The Canadian telecom says it expects to record a charge of $1.2 billion related to its U.S. telecom business. Cogeco says the charge is due to a write-down of goodwill assets amid a competitive environment. The impairment will not impact its cash flow or day-to-day operations. BMO Economics says the World Cup is expected to spur modest GDP growth in Canada, driven by tourism and hospitality spending. Its report says tourism gains are estimated at between $1 and $5 billion, while domestic spending will be up to $1.5 billion. BMO says the impact will be strongest in Ontario and BC. The games are being played. And taking a quick look at the markets, the run that they've been on, having a bit of a setback today, of course, with the news that talks in the Middle East may be falling apart between Iran and the U.S. You can see the TSX off by 0.75 point, still above 34,500. And south of the border, looks like the win streak, maybe it'll continue. It's hard to say with these markets right now. But you can see the S&P 500 off slightly, not overreaction to the news, and the Nasdaq's actually in the green, albeit barely, but they are on a run. And even with today, depending on where we end up, the markets continue to push higher. AI infrastructure serving as a major driver, while investors have spent the last few years focused on hyperscalers, cloud computing, and advanced processors. Our next guest says some of the biggest winners this year have been memory chip companies. Joining us now to discuss the evolution of AI investment and where he sees opportunities is Brian Mulberry, Chief Market Strategist at Zacks Investment Management. Brian, thanks very much for joining us.
Good morning.
Are you just a quick reaction to what the markets today? We have this news. It looks like everything's falling apart in the Middle East, yet the markets really aren't reacting right now, are they?
Yeah, oil is up on the day, and that certainly is creating some stress. You're seeing it in some of the other sectors like materials and industrials, where the fuel cost will certainly impact profits later on. But we're not at maximum stress yet. We're not back over $100 a barrel. So it's kind of in between, if you will, which is the modest reaction that you're finding in the market today.
So AI still rules then, doesn't it?
It does, especially what we're seeing in the NASDAQ today. News based that NVIDIA's new processor chip is going to end up in PCs, and that's boosting both Dell and Microsoft. And that processor speed is actually one of the main reasons we wanted to talk about memory, because as processing speeds have jumped 3 times in the last year, memory capacity is only up 1.5 times. And if you're processing a lot of data very quickly, you still have to transfer it from one place to another. And that's where that DRAM memory comes into place. The new servers that are being designed today are using 12 times more chips in memory than they did before. They used to have 8 memory chips per server. Now it's 96. And so the growth that we've seen in this AI CapEx spending has just kind of had these rolling waves into different components, memory being the latest one. And that's why you're seeing things like SanDisk, Western Digital, and Micron have these gigantic 200, 300, 400% year-to-date returns, because the demand for their product is up 12 times in a year-to-date period as well.
And does that look like that's going to ease? And can they meet that demand?
Well, processing speeds definitely continue to gain. So the demand for memory is absolutely going to grow as well. And I think that's going to be the critical question is, can these manufacturers of memory meet that demand from a true production perspective. And so with 12 times more orders than what they had, they really do need to reinvest in some of their manufacturing capacity. It looks like they will, particularly SanDisk and Micron have said that they will increase that production capacity to meet the need. That's good for overall computing power, right? We've heard from a lot of companies in the technology sector, even the software names that were supposedly going to die, they all said that they could have done even better in terms of revenue growth and earnings if there were more computing power available. So all again, coming back into just the tech stack and the rolling wave of investment that this CapEx is providing, it just shows why this market continues to climb higher and higher, because the growth is spreading out into even these far corners of the tech stack.
And so is that the potential bottleneck, expanding capacity, and are we looking at something that has some legs to it, that this could go for a while?
Yeah, I think there are some durable formations here, because you have to have some of these components to get to the far side of computing power that you're looking for. Where we're at in the moment is just the very early stages of what AI can be. We won't know what it will be until we resolve some of these computing issues. We have to have more capacity. Everywhere you look, the price of tokens, which is just a parable for the price of computing power, is going higher and higher because there's just not enough supply of compute available to satisfy the demand. So once we get another 50 or 100 data centers built and they all have these components in place, then we'll be on the end where we can find out what AI is truly capable of. But it does mean there's durable legs to the revenue growth of these component makers, especially in processing speed as well as memory capacity. Those are just really the important infrastructures that data and AI are going to run on for a long time.
And there's lots of free cash flow still floating around, isn't there?
Yeah, absolutely. And when you look at the free cash flow growth of these memory stocks, it's just absolutely unbelievable. SanDisk going basically from zero to about 40 billion in cash on hand. That gives them the available financing that they can organically grow that manufacturing capacity that they're going to need to meet all of this demand. They don't have to leverage their balance sheet. They don't have to take on any type of debt financing. They're generating enough cash in order to do this type of growth on their own. That's one of the reasons the stock price looks attractive at this moment in time, is that they're going to be able to do this in financing their own growth going forward, which means they're not tethered to other partners at a later period of time. And that's, I think, one of the reasons you're seeing investors react to the stock so positively.
And so overall, you still see some opportunities then?
I do. I think it's still an attractive valuation. You haven't missed the boat, if you will. Again, the demand for these are going to be very, very long term, meaning 3, 4, 5 years. That's forever when it comes to technology names and technology components. So that means that there's still upside left, especially in these memory names that we like so much right now.
And I just want to go back to NVIDIA for a sec. What are your thoughts about getting into the computers like this, into the PCs?
There's no question that NVIDIA has been the gold standard for processing speed. What they've been able to do on the enterprise scale with the Blackwell servers that they offer, it's showing that they are clearly the leader out there in front in what processing speed looks like. The fact that they've been able to reduce that down into a retail size unit that will fit in PCs, that's a real game changer. And to be able to be involved with that, it obviously is impacting Dell and Microsoft in a very positive way.
All right, Brian, we have to wrap it up there, but thanks as always for joining us.
Thank you.
Brian Mulberry, Chief Market Strategist at Zacks Investment Management. Coming up on Friday, GDP data showed that Canada is in a recession, albeit very technical at this point. We'll look at how consumer confidence is holding up when we come back. And on Friday, Canada's GDP data showed that the country is in a technical recession with 2 consecutive quarters of contraction. To tell us about how consumer confidence is holding up, we spoke with Nick Nanos, Chief Data Scientist at Nanos Research.
Consumer confidence has been weak for almost more than a year, and we're basically at the neutral point. It's at around 50.7 out of the 100-point scale, which means it's almost perfectly neutral. It speaks to the fact that many Canadians are holding their breath, wondering what the future will have in store in terms of the economy. And the kicker is there's a significant regional variation. In the province of Ontario, the industrial heartland of the country, it is in negative territory. Consumer confidence is at 45 points out of 100, and it probably speaks to the uncertainty in the binational relationship.
Yeah, I was going to ask you about that, right? Because Ontario's seeing the lowest confidence at the moment.
Yeah.
Is it because as you say, there's so much industry in this province? Like, what do you think the reasons are for Ontario being the lowest?
I think from an industrial manufacturing perspective and from a services perspective, Ontario is probably one of the provinces that is the most integrated with the United States in the Michigan, Ohio, Indiana economies. And it speaks to the fact that it's a top priority for Premier Ford in order to have certainty on that binational relationship. And I think for a lot of Ontarians, they're wondering, where will the trade relationship be, not just in 6 months, but in a year, in 5 years, and where there'll be some type of certainty. Because right now, that's all we know is that there is uncertainty. People do not know where we'll be in 6 months or a year on the trade front. And I think that particular anxiety probably touches a raw nerve among consumers in Ontario.
Which parts of the country have the highest consumer confidence at the moment?
Actually, Quebec has the highest. It's at around 58 on the 100-point scale. I think a lot of that has to do with the fact that, Quebec basically, because of its renewable energy, the hydroelectric kind of exports to the United States, they're actually in a pretty strong position because the United States does need that, and there is a commitment in terms of all of those agreements. So, the consumer confidence in Quebec is the highest. And, when you get beyond Quebec, you can see kind of the prairies and kind of middle territory. But I think the key takeaway here, the outlier is Ontario. And considering the importance of Ontario to the national economy, that should be very worrisome.
For sure. Worker confidence in job security dropped by more than any other category. Maybe you can explain that category in particular and what that tells us about views on the labor market right now.
Well, we asked Canadians how secure or unsecure they are in terms of their job, and about 68%, if I recall correctly, said that they were secure, somewhat secure. And we've seen that security number been moving, a lot of it having to do with what Donald Trump is saying, and especially when he targets specific industries. And the thing is that even when the Prime Minister talks about diversifying the economy, basically what that means is that a signal for change, that the Canadian economy has to change to be more resilient. And whenever people hear about change, they wonder about what it means for their own jobs. And the thing is those job security numbers, are at around 68%. In terms of confidence or feeling secure nationally, but they're lower in the province of Ontario. And this goes back to what we were talking about. What will happen to the automotive sector? What will happen to the industrial sector in Ontario? Where will it be in 5 or 10 years after the trade situation settles into the new normal that no one knows what it'll be?
Yeah, for sure. There's just so much uncertainty right now, right? When it comes to expectations of improvement to personal finances, that fell to 11.5%, so that's down 1.3 points. What does that tell you right now about how people are feeling?
Well, the movement is within the margin of error, but, the key thing here is that when we ask Canadians whether they think their personal finances are better or worse, the better number, as you mentioned, is at around 11%. The worst number is 45, which means Canadians are basically 4 times more likely to think that their personal finances are worse off rather than better off compared to a year ago. And it speaks to kind of the dark cloud for a lot of Canadians when they're thinking about the rising cost of living, the rising cost of gas, the rising cost of housing, rising cost of buying groceries, and how they're feeling the pinch when it comes to their personal finances and how they're trying to manage this, the rising cost of living.
And then, of course, too, we're just listing all the ways Canadians are feeling really not confident in the economy. But when it comes to the Canadian economy, that confidence down over the week. What signals in the broader data might be contributing to how people are feeling in that aspect?
Well, yeah, only about 18%, or about a little less than 1 out of every 5 Canadians believe the economy will get stronger in the next 6 months, while I think about 47% believe that the economy will get weaker. And it speaks to that kind of that undertone. There is one positive piece of news, Lindsay, in the numbers. And that has to do with real estate. You know, we ask Canadians whether they think the value of real estate in their neighborhoods will increase or decrease. About 40% of Canadians believe that the value will increase. 18% think that it'll decrease. A bit of an upward movement on that front. And, you know, usually the increased numbers in the last 10 years have been the strongest part of Canadian consumer confidence. And, you know, we've seen the increase of housing prices on that front. So it's dropped significantly, but even at the numbers that they are today, it's up, I believe, about 4 percentage points in the last 4 weeks.
Interesting. Okay, so I was going to ask you, I do always like to ask you about some good news. You did have some for me, so that's great. But when it comes to consumer confidence, it now has a reading of 50.7 in your index. I wonder what that means, and particularly if that number would go below 50 or drop to below 50.
Well, you know, recently it has dropped below 50. And, you know, the fact of the matter is over the past year, it's been sputtering in neutral somewhere between 45 and 55 over this period where Canadians are unsure about the future trade and economic relationship with the United States. So what this means is that they haven't gone significantly negative. It's kind of like people are holding their breath, wondering what's going to happen in terms of the Canadian economy. That's all they do know, is that there will be change. They don't know what that change will be, whether it's dealing with the Canadian economy becoming more diversified and resilient, or that change related to the relationship with the United States. They don't know what that change will be, but they know that there will be change. And when there's change, there's always anxiety. What we have to worry about are Canadians delaying purchases, right? That this psychology, right, of anxiety converts into consumer behavior where people delay purchasing a pickup truck, even though they can afford a pickup truck and they want a pickup truck, but they just figure this might not be a good time. That's the danger in this next phase of tracking of consumer confidence, that Canadians start delaying purchases, and that creates a negative cascading impact on the GDP numbers.
Lindsay was speaking with Nick Nanos, chief data scientist at Nanos Research. CTV's Jeremy Sharon now has more on how Conservative leader Pierre Poilievre is calling for an emergency debate on Parliament Hill this week to address the recession concerns.
In a Sunday morning letter to the Prime Minister, a push from Pierre Poilievre for Mark Carney to answer for the state of Canada's economy. Calling for an emergency debate in Parliament over the issue, you promised you would deliver the fastest growing economy in the G7. You delivered the only recession in the G7, wrote Poilievre.
This is a full-blown Liberal recession.
A Friday report from Statistics Canada showed the country's economy contracted slightly for a second straight quarter, meeting the technical definition of a recession. Poilievre lays the blame on the government.
This is people's lives. Behind these statistics are empty stomachs, empty fridges, and empty bank accounts.
We asked people in Ottawa what they think and what or who they blamed for it.
I do feel like times are tough.
It feels like a standstill, and a lot of people that you talk to, they feel like they're never getting ahead.
Are we really in this session as a result of factors that were the last 2-3 years, or is this a reflection of the current government?
Some economists poured cold water on the recession talk, arguing the declines are marginal and don't indicate a widespread downturn.
Economists tend to be very careful around using the word recession. The truth is that the economy is not in good shape. Through most of 2025, we struggled up and down.
But most are clear the country's economy is struggling to gain traction, and that can't be ignored.
We need to deal with this. The difficulty is that certain parts of the country are struggling, while other parts of the country really are faring quite well.
In a statement to CTV News, the finance minister's office called Poilievre's letter political theater, chalking up the downturn to external factors like the U.S. trade war, and pointing to efforts to build new global relationships and attract major investment here at home.
And that was CTV's Jeremy Sharon. Coming up, today's market drivers with Bloomberg's Monique Malima. Time to take a look at today's market movers, and for that we are joined by Bloomberg Equities reporter Monique Malima. Monique, thank you as always for joining us. Constellation Energy having I can't say a fire sale, but there's a bit of a sale going on right now, isn't there?
Yes. So Constellation Energy, their shareholders are planning to sell 11 million shares at a total cost of about $3.1 billion. And that's been really weighing on their shares this morning because, like you mentioned, this is such a large sale of shares. Constellation itself is planning to buy back about 2 million of those 11 million shares. But with this, we're still seeing the pressure just because it is such a large amount coming to market at one time.
Any particular reason for it?
Not in particular, especially because this is the shareholders themselves selling these shares. So it's not the company making this decision. The company is instead taking advantage of this to buy back their own shares as part of it. But it's just something that happens from time to time with shareholders. We see within different stocks in the market.
All right. Next up is Strategy. What's going on there?
So Strategy, their shares are lower this morning after the Bitcoin Treasury Company announced that it had sold about 32 Bitcoin for a cost of about $2.5 million. This is a company where their main goal is to buy and hold Bitcoin. So the sale of this Bitcoin really kind of provided a bit of a shock to some of the investors. The company hasn't sold any Bitcoin since 2022. But analysts do note that the company had been kind of hinting that this might be coming. We've seen pressure in the crypto markets, and the company does have to pay dividends on its preferred shares. And it said that that's what this sale will go towards. So analysts note that like some of the founder as well as the CEO of the company have both said in recent months that Bitcoin sales is something that they would consider, and now they are taking that action.
All right. Fluence Energy riding on NVIDIA's coattails, but they're enjoying a nice little ride because of NVIDIA.
Yes, so Fluence Energy, their shares are up this morning. They're a battery energy storage company, and it was announced this morning that Siemens Energy, Fluence Energy, and nVent had partnered together to create a design for NVIDIA's AI data center factory. And NVIDIA is planning to have a big grouping of data centers, and Fluence Energy will be part of that design for the battery energy storage. Analysts say this is really positive. This can introduce a new revenue stream for Fluence. And while the agreement isn't an exclusive agreement, the design for these factories will be with Fluence's batteries in mind. So customers can still choose potentially to go with other providers, but because it's specially tailored to Fluence, they're expected to get some of the business from this. And with all the growth we've been seeing with AI recently, they're seeing a lot of potential upside from this.
All right, last one, MP Materials getting new coverage.
Yes, so MP Materials, they are trading a little higher this morning after Needham initiated coverage of the stock with a buy rating. The company is in the rare earth space, and there's been a big focus in North America and in the Western world in general on creating their own pipeline of these rare earths, since most of it right now comes from China, and there's some concerns with so much of the supply being concentrated in one country. And MP Materials is one of the largest deposits of rare earths in the Western Hemisphere. So analysts are really positive that this can emerge as one of the leaders as countries like the US look to ramp up their supply chain. They also note that the company has potential upside because of its vertical integration. It's not just in the rare earth space, it also creates magnets, which has been really important for things like AI, robotics, electric vehicles. So they see a lot of potential for this company being able to capitalize on this growing demand, and that's why they're giving it a buy rating.
All right, we'll wrap it up there, Monique, but thanks as always, Bloomberg's Monique Malima. When we come back, a new generation and a new kind of movie may be reshaping the box office. We'll break down what the data says next. Oil prices are rising today as a deal between the U.S. and Iran appears delayed, maybe even off the tracks. Iranian state media says the country will move to fully block the Strait of Hormuz. Negotiators will stop exchanging messages with the U.S., all in retaliation for ongoing ceasefire violations, is what it says. Iran is focusing on Israel's military operations in Lebanon against Hezbollah. Apotex is looking to raise as much as $1.2 billion through its IPO. The Canadian drug maker plans to issue as many as 50 million shares in the $20 to $24 range. That debut would be the largest in Canada since 2021 by Definity. Apotex was founded by Barry Sherman. He and his wife Honey were found dead in their home 9 years ago. Murders still unsolved. Shares in NVIDIA up nicely today, closing in on 4% as it enters the market for personal computers. A chip giant revealing a new N1X processor made alongside Microsoft. That processor will be incorporated into a super chip that will debut in the fall in Windows PCs from Microsoft, Dell, HP, and Lenovo. NVIDIA's plan is to release more than 30 laptops and 10 desktops with the new chips over time. And a quick look at the markets. You can see the TSX clawing its way back. It is down now, still down by 0.18%, 0.2% roughly, but it had been off earlier on, so still pushing up in and around record territories. South of the border of the U.S. markets, let's take a look and see what they're doing now. And they seem to have bounced back, even with the news that's unfolding in the Middle East with oil rising. We're still seeing the S&P 500 up slightly right now, and the NASDAQ is up by about a quarter point. A box office revolution is shaking the movie business as low-budget indie hits outperform traditional Hollywood blockbusters. This direct internet-to-theater pipeline is being driven by Gen Z, who now make up 40% of cinema audiences. Here to break it down further is Paul Dergarabedian, a senior media analyst at Comscore. And Paul, thanks very much for joining us today.
Great to be here, Roger. Thank you. Certainly an exciting time, that's for sure.
I'm a big movie. I love going to the theaters to see movies. And so it's good to see the next. I sound like the old guy now. Good to see the next generation wanting to follow up on it. What are they doing? How are they approaching movies?
Well, it's interesting. Like you said, Gen Z coming up. In our data, we're seeing that audience is increasing. But also their peer group on YouTube, Kane Parsons, who directed Backrooms, that earned $81.4 million in North America this weekend, $118 million worldwide, 20 years old, $10 million budget, A24 releasing that film. What a result. I mean, I went and saw this movie at our local Sinopolis theater here in Southern California, packed house. And they had to have signs on the doors saying if you're under 21 and unaccompanied by an adult, you can't go in. I mean, the demand is so high, they're having to keep people out of the theater, which is quite amazing. And then Focus Features has Obsession from filmmaker, I think he's 27 years old, Curry Barker. Obsession, an incredible film, very disturbing. About $1 million budget. It's up to over $100 million domestically. And its third weekend this past weekend, its box office went up 14% after seeing a jump last weekend as well in that second weekend. So the demand is there. And ironically, the big Star Wars movie dropped, I believe, nearly 70% its second weekend. Wow. Opened huge. But I mean, look at that paradigm shift. Is this a flash in the pan? Is it an anomaly? Or is this a trend? We have to kind of wait and see.
I mean, because they are still going to see the big movies. What was the one last year? The big with Jason Momoa and Jack Black, and its name's gone right out of my head right now.
Oh yeah, a Minecraft movie.
Thank you, Minecraft. I was trying to find it. I was like, which one was it? But I mean, people went to go see that. What's drawing them back? I mean, everybody was saying movie theaters are dead, especially after the pandemic. They said movie theaters are dead. Nobody's going to go to those anymore.
I know, that's what everyone thought. I never gave up hope, and in fact, in the middle of March of 2020. The box office essentially stopped. Brick and mortar theaters were shut down. And over the ensuing years, it just made this huge comeback. And we saw immediately during the pandemic when everything shut down that people were going to drive-ins. And that showed the kind of enthusiasm people have for getting out of the house and seeing movies in that communal environment. And you mentioned, like a Minecraft movie. Family films, PG films have been outgrossing every other rating for the past couple of years. So families powered The Mandalorian and Grogu's a really strong first weekend last weekend. There's a lot more to come. Big family movies like Minions and Monsters, Toy Story 5. Then, of course, you have The Odyssey from Christopher Nolan in July. Coming up in June, just a couple of weeks here, is Disclosure Day from Steven Spielberg. So we're going to have filmmakers that are just starting out that were a mirror image, in a way, of Spielberg. And they're going to be in the mix with a big Spielberg film. And then you're going to have Kane Parsons and Curry Barker, two names I didn't even know like a few weeks ago because I'm not in the Gen Z category. I'm much older, but I'm here for it. I think it's great, and theaters need movies. And wherever they come from, I don't think we should care as long as they bring people in to packed houses for movie theaters. So the movie theater is not dead. It's definitely here. The movie theater is here to stay. And I think we'll get to 9.5, 9.6 billion North America box office this year. And then next year could be 10 billion for the first time, since the pandemic. So that'd be a milestone in terms of the box office.
And so are there any other trends we're seeing with Gen Z or Gen Z?
Well, I think the social media component of that generation is really important. And what they're doing is they're taking the excitement they feel for Kane Parsons, who does the Backroom series on YouTube. And then they're saying, well, we're going to follow this filmmaker to the big screen. It's a really good movie. And Obsession, if you haven't seen it, I mean, it's not for everyone, but wow, it's for a lot of people because it's amazing filmmaking. It just shows in a way what a meritocracy the movie theater or filmmaker side of this is. I mean, obviously having A24 and Focus Features, Neon shepherding the marketing or helping with the marketing and distribution of these films help. But you still have to make a really good movie to pack people in week after week. So quite impressive. Are we in the cusp of a big sea change? I don't know, but time will tell. And I think it's really cool.
And do we know their thoughts on what they think about AI? My child's like, he's 18 and he AI, he hates it. He doesn't want to see it. He doesn't want to see it in photography. He doesn't want to see it in videos. What does that generation think of it? Do they like it? Are they embracing it, or are they shying away from it?
You'd have to ask them, because I'm really way older than that. But my sense is, having talked to them, is that it's kind of a mixed bag. Whenever a new technology comes along, everyone kind of pushes back. Even I remember, I don't remember this. I wasn't alive then, but when movies went from silent to talkies, people were like, no, that's terrible. And it's not exactly the same. It's very much more technologically advanced, greater implications. But the concept's there. Yeah, I mean, it is. And I think they're mixed on it because nobody wants to be like completely have their skill set replaced by AI. But I look at it as a tool to help with certain things. Like if you're editing a movie and there's a bunch of blank space through the thousands of hours of footage and you can cut that out with AI, that's great. For research, it can be good, but you got to be careful with it because the human part is the best. You have to really have a critical eye on what you're seeing coming back to you with any kind of AI prompt or query. So it'll get more sophisticated over time, but there's a fear of it. Some people embrace it. True of any big technology that comes along.
All right, Paul, we got to wrap it up there, but thanks very much for joining us.
All right, Roger. Thank you.
Appreciate it. Paul de Garibaldi, Senior Media Analyst at Comscore. Coming up, IPOs generally tend to generate excitement and strong early demand, but what about the risks? More on that next. Time now for On the Radar, and IPOs are in focus. Earlier, we sat down with Jeff Hall, Senior Financial Advisor at Manulife Wealth, who says while IPOs can generate excitement and strong early demand, history shows they also come with some volatility.
I can understand why investors do get caught up in the hype machine, because that is what an IPO ultimately is. It's peak hype, peak FOMO, fear of missing out, peak promotion. Because just like if someone was selling a house, you'd want to cut the grass, wash the windows, stage the house properly to get the maximum price. That's really what an IPO is. They want to get the maximum value by taking their company actually public. So that's some of the pitfalls that the public has to be watch out for. But also, most IPOs, whether it's Facebook, all the way back to even Tim Hortons, et cetera, you'll notice they go up quite a bit, but then they kind of start to falter a bit and kind of settle down after the hype is all gone and people moved on to the next thing. And then people always have to watch out for that 6-month cliff, I call it, that 180 days when a lot of the founders of the company, a lot of the shareholders initially are locked in the hockey penalty box for 6 months until they can sell their stock. And then they're all running to the fire exit at the same time. So there's a lot of weird maneuvers within IPOs people just need to be aware of, and then they can make wise decisions based on that.
Are there ones where you win when you buy right at the beginning?
Well, the ones that really tend to win are the ones that own the stock before the IPO.
The IPO,
so sure. SpaceX is coming out. There's just going to be a handful of stock available. It's going to be way oversubscribed for. But there's other ways to own SpaceX before the IPO. You can either buy companies like Alphabet, which is Google and YouTube. They own 7% of SpaceX. EchoStar owns about 2 to 3%, which is over half the value of their company, just SpaceX stock. We can also look at competitors like Rocket Lab as an example. So as an example, on Friday, we had Blue Origin with Jeff Bezos' company. His main rocket test exploded right on the tarmac there. But sometimes people don't understand space. So Friday, a lot of space stocks went down a bit. I'm like, that's strange. It should all be going up because one of their biggest competitors just, literally exploded. And so that creates opportunities for other ones that will now pick up the slack, which is pretty incredible. It's an exciting area.
And there's some changes coming, too, with the IPOs, right, with the NASDAQ and NASDAQ Texas.
Yeah, there was the fast entry rule, which is kind of unprecedented, where usually the indexes like the NASDAQ 100 or the S&P 500, once a year or so they'll adjust it. The S&P might boot out 3 kind of low-performing stocks, but 3, and they adjust it from time to time. This time around, the NASDAQ 100, as little as 3 days in, maybe as late as 15, are going to possibly push in SpaceX stock as an example. And that's an incredible situation, because what will happen is, as we talked about, if most of the shares are in a penalty box and haven't come out yet, and the public's going to go nuts for this when it first comes out, and then all these huge index funds, pension funds, mutual funds will be forced to buy SpaceX. Where is the float going to come from? So supply and demand is going to be way out of whack. We could see a big spike up in something like SpaceX at the IPO.
And I guess the big question, where's the money coming from?
That's one of the tricks, too. I think
we're talking 1.8 now trillion. Where's the money coming from?
You got it. So that's some of the opportunity or danger investors have to watch out for. What kind of investor will buy SpaceX? Does it tend to be age 20 to 36? They maybe own a lot of crypto. Maybe they'll roll out of crypto. Could be a big, amazing company like NVIDIA. They might want to just temporarily leave to play the SpaceX trade and go back to NVIDIA as an example. But one of the biggest areas of cannibalization I think could happen is Tesla. Elon Musk's other company, because everybody already loves Elon Musk there. They adore him. It's like, do they still bet on the car company, or do they jump to SpaceX? A little bit sexier, a little more interesting there. They may jump ship there. So that's why I think Elon Musk has said, we might merge Tesla and SpaceX together. I think he's saying that to try to discourage people from trying to make this hop, changing horses, that he owns both horses. It could cause a lot of disruption for him.
And does that provide opportunities? And for something that, we're not necessarily, NVIDIA is going to be the one where everybody pulls money out to go there, but is it something you should be looking for?
Yeah, absolutely. Because I think if someone did, let's say people pulled out of NVIDIA a little bit and made the stock go down 2, 3, 4%, just because some people are just gently transitioning over to SpaceX, suddenly you get NVIDIA at a discount for something that has nothing to do with them because SpaceX has an IPO. So sometimes these distortions or distractions provide professionals and the public opportunities to kind of take advantage of some things that are being unacknowledged or in the shadows off to the side. That's a great deal.
All right. And then other IPOs coming up, are they going to pay the price for SpaceX?
I think some of the nuances of how the SpaceX deal is going to be done is going to now infiltrate other IPOs. We've got OpenAI coming out probably around September. That's ChatGPT. And you got Anthropic, a great AI that'll be coming out as well. So some of these fast-tracking rules to add things to an index and some of the other rules, even Elon Musk added a little bit of a pressure valve. He's looking at if the stock goes up more than 30%, maybe 10% of those in the penalty box can kind of sell off a bit of stock to take some of the pressure off, to allow that freedom from markets and index funds to have the opportunity to pick up some stock in a less chaotic tornado that are IPOs.
Is there anything Elon Musk, can there not be a chaotic
no, it's
tornado
chaos.
around
it's 24/7 chaos.
It's fascinating watching him. But so OpenAI, Anthropic, you still think they'll do all right?
Yeah, they're great companies. I think I'm more interested actually in Anthropic than anything else. And I think SpaceX is going to do very well. It's part of the future. Yeah. But space might be something for shorter term investors they could consider to roll into space. And after all the limelight and fanfare is done at the IPO, maybe they can drift into other areas as well. But space is interesting, but people got to look at the math. Because again, there's a lot of companies out there like the NVIDIAs are doing great things every day. And some space companies are kind of just there for a bit of a rocket ride and then they're done.
That was Jeff Hall, Senior Financial Advisor at Manulife Wealth. Coming up, hot picks. We'll zero in on 3 plays in the tech sector when we come back. Time now for hot picks, and today we zeroed in on 3 plays in the tech sector with Michael Monahan, partner and portfolio manager at Founder ETFs. We kick things off with his thoughts on Dell.
It allows you to have your own on-premise AI server to run the foundational models, to protect your data and keep it safe, yet take advantage of the compute power of the foundational models.
Okay, and you say all 3 of these picks that we're going to go through are riding different parts of the agentic AI wave. Is that right?
That's right. We see Palantir, Dell, and Oracle all riding the agentic AI wave, just slightly different places of that wave.
And before we go on to your next pick, I just want to go back to Dell, because what are some of the biggest risks that you think are facing this company right now?
So we see growth for Dell. We don't see a lot of near-term risks. If you look at the last quarter, the growth on their AI server business was absolutely explosive. And then with Jensen's announcement last night that he's partnered to bring the CPU, bring an NVIDIA CPU to the desktop, Dell will be one of the beneficiaries of that. So we don't see a ton of risks for Dell right now. We see a tailwind from both on-premises agentic AI and the fact that we're now beginning to run agentic loads at the desktop, and Dell's a beneficiary of both of those.
Okay, your next pick is Oracle. Tell us why you like Oracle out of all the names you could have picked.
Oracle is attacking the boring but profitable side of AI infrastructure. So right now we're compute constrained. The constraints are as tight as getting energy into data centers, getting the data centers energized to be able to push tokens out. And this is Larry Ellison, who brings that founder mentality, the type of investment that we do. He had the vision to see that the world would be compute constrained several years ago and starting building out his AI data center business. So he's ahead of the curve as more people want access to tokens coming out of these AI token factories. Larry really put himself to be there first, and that's why we're so bullish. The stock got punished earlier in the year, but the stock action is showing that people now understand that we're AI compute constrained, and Larry has positioned himself to take advantage of that.
Yeah, I mean, punished earlier in the year when we were talking about that whole kind of software sell-off we saw at the beginning of the year. There's obviously companies that are, going to win from AI in the software sector, and some that will be made redundant. I'm assuming you believe Oracle is one that's obviously partnering with the right companies and is going to make it through. Is that right?
Yeah, we believe that they've got several hooks. So hook number one is legacy systems that will be the trusted endpoint, storage, and proof of record for existing corporate data. And then number two, a lot of these large corporates, if they're regulated, HIPAA, government data, et cetera, they can't put their data on a public cloud. So their only choice is to use their existing private cloud with Oracle or new Oracle private cloud. So they're very well positioned to take advantage of the growth.
Last hot pick is Palantir. So you mentioned this off the top, another one riding, a part of the agentic AI wave. Tell us more about why you like Palantir right now.
Palantir is very well positioned. The most important thing to remember for AI is that AI still requires really good human input. If you don't have human input, you get referred to what is colloquially referred to as AI slop. However, if you have a highly trained human operator on the front end helping guide the AI and then reviewing the AI's work, you magnify that human operator's capability. And with their forward deployed engineers, that's one of the things that Palantir is doing well, along with doing what's been a 20 or 30-year goal of a lot of business intelligence companies, and that is to take the disconnected data, whether it's living in an ERP system or a CRM system, bring it all together and make sense of it. And back to this theme of trusted endpoint, Palantir then takes the AI models, touches the existing enterprise software within the corporate, and is the trusted layer to bring that data out and analyze it. And then why we're so excited, the growth here is just really unprecedented. Rule of 40 went from 127 to 145. We think Alex will have a couple more quarters like that. And even though some of his retail investors have transitioned to chase the Microns and the SanDisks and the SOX complex, we think the institutional growth investors over the next couple quarters will come in. That's why the stock traded sideways and why it's been an opportunity for our investors and your viewers.
Lindsay was talking to Michael Monahan, partner and portfolio manager at Founder ETFs. Well, it's a sight that is surprising many. Plenty of tickets are still available for FIFA World Cup matches in Toronto and Vancouver, with the game less than 2 weeks away. CTV's Kamal Karamali has more on why Canadians are holding off on heading to the games and the challenges businesses are facing trying to reel them in.
It's been a lifelong goal for Joshua Cateau to watch a FIFA World Cup match in his own backyard. But those dreams dashed with one look at the ticket prices.
I feel like it really pushes the game out of reach for a lot of people who want to be there and want to show up. And it's really disheartening.
Lots of tickets for World Cup matches in both Canadian host cities up for grabs less than 2 weeks out. Canada's first match in Toronto not going for anything cheaper than $3,000, but other games ranging from $600 to just over $1,000, and that's just part of the overall cost.
Hotels are very expensive in Vancouver and Toronto. Airline flights are very expensive right now.
But it's not just the matches that aren't selling out. Vancouver's official viewing party showing large clusters of seats still available to its fan festival. Officials, though, not sweating it.
As people are starting to make and lock in their summer plans, we have quite a bit of confidence that people will secure their seats.
The cheaper option, coming here to bars and restaurants broadcasting the games, but getting official FIFA branding at your establishment, not as easy as it sounds.
You don't want to be necessarily using FIFA's big IP assets. Nothing that sort of suggests or even comes close to suggesting that this is an official venue.
The City of Toronto's guidelines say businesses can't use words like FIFA, World Cup, or show the trophy to reel in customers, with the city able to issue fines or even late charges, unless they've partnered with FIFA's official sponsors like this Toronto bar.
We have brand partners that are directly associated with FIFA and the World Cup, and obviously it's through them and the tools that they provide that we're kind of bringing the whole space together.
Those spaces, likely where these fans will end up.
It's really upsetting to see ticket prices where they are,
with prices still a bit over the top. Kamal Karamali, CTV News, Toronto.
Market Call A is coming up next. Today on the show, we have Theo Lind. He is manager at Lind Equity Fund, and we'll be taking your questions on North American stocks. Before we go, quick look at the markets, see how they are doing right now. And TSX, it's pulling back up. It's still in the red, but off by about a quarter. S&P 500 slightly into the green, up by 0.07. You can see NASDAQ is up by a quarter point right now. And that's it for Morning Markets. Thanks for watching. We'll see you back here tomorrow.